continue to battle the doomers, share with you their latest lies, and actually give you the facts. We're going to talk about the unemployment rate. And I got to know, did Ken Griffin just give the ultimate flex buying a Stegosaurus? I don't know if you saw this, folks, but good old Ken Griffin just spent $45 million to buy a Stegosaurus skeleton. That is some... I got to ask, where the heck are you going to keep a Stegosaurus? But yes, $45 million gets you a complete skeleton. All righty, folks, let's talk about the latest and greatest doomer lie. And again, I share these with you so you become aware, so you can poke at their nonsense and frankly become a better economist and understand facts. The latest lie is now recirculating that large institutions own 35% of single-family homes. That data is once again circulating. People are tagging me on it, telling me I don't get it, I'm wrong, all of those things. But thanks to the army of great real estate analysts out there like Logan from Housing Wire, here are the facts so that you can look at this data and understand it. Number one, just so you know, this is where you should start. There are 146 million single-family homes in the United States. Okay? Today, large institutions own 0.4%, not 35%. Let's just go into the numbers and watch how simply asinine this 35% quote is. So if you take 35% times 146 million, you get 51.1 million units. That would mean that you walk down a street and every third home is owned by a large institution. I ask you, in any neighborhood where you live today, does a large institution own 1 in 3 homes? Of course not, because they own 0.4%. So if 35% equals 51.1 million, what does 0.4% equate to? Well, folks, that equates to a measly 584,000. So, folks, when you have a doomer or a crash bro trying to scare you by saying that large institutions like BlackRock or Blackstone or whoever owns 35% of homes, you now have permission to block them because they are lying to you. It is a lie. It is a bold-faced lie. Know the facts. Don't get distracted. Keep doing your work. Look for great deals. It is out there for you. Folks, one thing that we do have to talk about today, it is Thursday, and that means we get the weekly jobless claims. Now, this is a number you and I have been looking at for a couple of years now. We do need to remember that last week was July 4th, so this number could have a little makeup or a little give back for that holiday week. So this number is bad. But is it bad because we lost a day last week? Is it bad because we've taken a step higher? We won't know until next week, but it is worth paying attention to. So what happened? So jobless claims last week were reported at 223,000. Again, near cycle lows. It was estimated to rise to 229,000, where in reality, it came in significantly higher at 243,000. 243,000, just in case you need to know, is the highest number since August of 2023. So again, we need to figure out, is this just a makeup from July 4th, which I'm kind of leaning towards, but it doesn't matter what I think. We will know in 7 days. Does this number go down to the 230s next week, or do we get a second print in the 240s, continuing the stair step higher? So next week's number is very, very important. Let's talk about something that Nick Timmeros, or Nicky Leaks, as Meet Kevin likes to call him, just tweeted out at the Wall Street Journal. He's highlighted that, hey, big labor gains in the U.S. has muted wage gains, and that when you mute wage gains, they expect services inflation or core inflation to have a significant fall in the second half. So I ask you, if inflation continues to roll over, if shelter continues to roll over, will this mean September rate cut? Will this mean a November rate cut? And more importantly, I think we're really starting to talk about a larger than normal rate cut. Again, as I've said for a while, I believe they're going to skip September, and then bang, we get a 50 basis point cut. I think it's like November 7th or November 8th, something right after the election. I think the election is Tuesday, and we get the Fed's answer on Wednesday, so literally the next day. But again, there is more and more folks coming out talking about a September rate cut, more and more folks talking about a 50 basis point cut in September. Again, I am of the stance that is just the market doing what the market does, is trying to yank the Fed to a certain direction. I expect Powell to give them the Heisman, but frankly, we won't know until the end of July. Excuse me. End of July. Jerome Powell in front of a microphone at the Fed, giving the Fed announcement. We're going to know, does he tee up a September cut, or does he stick with the higher for longer, data dependent, that kind of thing? We're going to know, and we're going to know pretty soon. Let's talk about a disaster in San Francisco. Don't know if you saw this, but in San Francisco, this was reported by Triple Net Investor. Triple Net Investor, somebody I follow on Twitter. He is putting out a lot of great data about multifamily and office. Give him a follow, Triple Net Investor. 1,200 apartment units that were bought for $704 million between 2017 and 2020 is going back to the bank. Yes, folks, this is going back to Bank of Canada. Bank of Canada is the lender. The loan amount, $687 million. Who are the buyers? Who were the borrowers? Goldman Sachs and Ballast. Ballast. They are defaulting. So what does this mean? How can Goldman Sachs default on a loan? Well, first and foremost, folks, I want you to hear the numbers again because you might have missed it. Total purchase price over a 4-year period was $704 million. The loan for Bank of Canada, $687 million. What does that mean? That means Goldman Sachs had, let's do the math real quick, $17 million of equity. Folks, that's not even 3%. So of course, Goldman is walking away from that loan. They had no equity, or nearly no equity, in the deal. And of course, clearly the debt is non-recourse. The only promise they made is, hey, if we don't pay, you can take back the units. Folks, it is nasty out there. It is going to get worse. We are just seeing pain build. It is going to get much, much, much worse. And again, this is multifamily San Francisco. This is not office. I keep telling you that the multifamily space is where the pain is going to be the most acute. It is going to be where the numbers are the largest. And there will be big players, a la Goldman Sachs, turning in the keys and walking away from their debt. Something else that came out yesterday afternoon is something called the Fed Beige Book. The Fed Beige Book is essentially a summary of what is going on across, I think it's 12, might be 13 districts in the United States. And what the Fed Beige Book really highlighted was slight to modest growth. If memory serves, I think it was 8 districts growing and 5 going backwards. Price sensitivity and more discounting. Again, consumers are pulling back. We've heard that before. Wage growth is slowing. People are finding it easier to hire as well. And then finally, the outlook pessimism from the election, inflation, policy, and geopolitics. Folks, again, this is something I brought to you first here on this channel. I believe the second half of the year is going to be slow, especially in real estate. Yes, I know rates are down, but again, we have just a lot going on. I think a lot of consumers are just going to go, hey, too hard, too noisy, don't know what's going on. I don't trust the government. I don't do this. I don't do that. I will wait. So we might see a cycle low in transactions, breaking the current low of 3.88 million. The good news is, if we do that, it will be the bottom. We could start building out of that. But the next 6 months, if you are in the real estate industry, it is going to be the worst of my 20 some odd years of buying. At least if you're paid on transactions. Flip that over. If you're an investor, if you're a home buyer, the market's going to be slow. This is going to be your opportunity to write a disrespectful offer, follow up, continue writing, and maybe, just maybe, get an amazing deal. Folks, I can't tell you enough. You want to buy real estate from people who don't want it. They need to sell. That is where the best deals come from. That is where the largest discounts are. That is where seller financing is possible. Again, one of the things that I would tell you as an investor I would get really good at is, hey, here's a cash number and here's a seller finance number. These are the kinds of things that can really move the needle, allow you to create generational wealth. It's in recessions. It's in the slow time. So I hope you're doing the work. I hope you're doing it. If you want to be around an amazing community, you can always go to our school community, One Rental at a Time on School. It's $20 a month, nearly 200 members in it. Old guy REI did a 3-hour accountability group yesterday. Yes, 3 hours, started at 6 p.m. They talked about, they had investors from Washington all the way to Atlanta. So from the West Coast to the East Coast. They talked about rent comparables, bookkeeping, screening tenants, and so much more. Folks, if you are just getting started, you should join the community just to be a part of the weekly accountability groups, not to mention the boot camp, the creative financing course that are all free and bonuses. I don't know why you haven't joined yet. Maybe it's me. Maybe I haven't posted the link for you. And that's probably true because I'm a horrible marketer. I don't do that enough. But yes, you need to join the group. I think we're at 191 folks. We need to get to 200. Help me get to 200 today. That'd be amazing. I would love to see that because I think that's when the community will really start growing. A lot of you are joining school day after day. Do me a favor. Jump in. The water is warm. Introduce yourself. Say, hey, my name is Bob. I'm from Florida. I'm hoping to get started. I've been watching Michael for years. I read his book. He says this thing's cool. Show me. You're going to have amazing folks reply to you, welcome you, invite you to the weekly accountability call. Take the 10-week boot camp. If you're need some focus, just go to the classroom. I gave you a $1,000 boot camp as a thank you. It's all there for you to dig in. So again, join school, $20 a month. We just had Henry Washington on, Lance Lambert the week before. More goodness coming. Again, I can't get over the fact that King Griffin bought a $45 million Stegosaurus. That is some big flexing right there. I can't imagine where you would, like, is he going to put that in his house? He probably is going to put that in his house. He is going to probably put that in his house. That's a big house. Man, crazy. All right, what else do I got for you? Got a lot of stuff. Man, a lot of reading the last day or so. United Airlines profit jumped 23%, but really highlighted that there's a weak forecast, folks. Looks like we're going to get some more discounts on airfare. I don't know if you remember the inflation reading from last month, but airfare was down 5%. Looks like the industry has done what it always does. They have added more and more capacity, which means they now need to discount. So again, if you've ever wanted to travel, go somewhere fun, looks like you and I are going to have some second half travel deals coming. Domino's Pizza. Folks, I don't know about you, but Domino's Pizza might be the ultimate sign that the consumer is pulling back. So Domino's Pizza has temporarily suspended guidance. That's not good. When a company goes on their quarterly review and says, hey, sorry, we don't know what's going on in our business. It's bad. We can't give you guidance, forward-looking guidance. That's not good. Actually, I should have checked their stock price. I did not check their stock price. I have to imagine it's down. I'm not even sure I know what Domino's Pizza's symbol is. I don't know. I could look it up. Anybody know what Domino's Pizza's symbol is? Put it in the chat there. But I got to imagine when the CFO says we've suspended forward guidance, that's code for sell, sell, sell. Not good. Weak guidance, slow international sales. Going to be very interesting. Looks like Ford is giving the Heisman to EVs. Looks like Ford is taking one of the plants that they had for EVs and is dropping $3 billion. Thank you, folks. DPZ. DPZ's got to be down this morning. That's the stock symbol for Domino's Pizza. Ford is investing $3 billion to expand large truck production instead of rolling out some more EVs. The ECB left rates unchanged. That is interesting. Again, you got to remember the ECB last month cut a quarter point. They said that price pressure is still too high, so they did not cut today. And folks, I guess we will close with Fed Governor Waller. Fed Governor Waller was out yesterday talking about the Federal Reserve is getting closer to rate cuts. Yes, folks, closer to getting rate cuts. Not in July, right? July's not coming. I think you and I can both agree. No rate cut coming in July. Again, the question is, will they set up September or not? That's where we're going with this, folks. Again, remember, become part of the school community, $20 a month. Actually, you know what? I want to hear from you. I want to hear from you. What would you like to see in the school community? Right? Today, we've got free courses that cost thousands of dollars. We have a calendar with weekly interviews and the like. We have a growing community of people networking and asking questions. But I want to hear from you. What would you like to see in the school community? What do I need to add, or what do I need to go out and get for you to join One Rental at a Time School? Serious question. $20. I'm already giving huge value, but I want to hear from you. What would I need to do to get you in school? Because the beauty of school that I'm seeing is once I think we get to 200, maybe it's 250, the community is just going to spiral and the momentum is going to be amazing. You guys will start networking together. You'll start helping each other. You got to join school if you're just starting. I would love you to join school if you have, 4 to 10 units. I think everybody is on a different level. And just the more people we have in there, the better. There was just a comment about how to write disrespectful offers. I could do that. I could actually host a session in the next week or so talking about the process that I go through to identify properties where a disrespectful offer might make sense. In fact, I will take that as an action item and make sure we do that. Writing it down. Sorry, I can't talk and write very well at the same time. Cool. Alrighty, folks, you're amazing. Take care. Have a wonderful day. This is July 18th Daily Financial News. Later.